Hello, cost accountants. In Chapter 6, we're going to be talking about how you can allocate out the cost of your support departments to various cost objects, namely the products that you are producing. So, what is a support department? It's any part of your business besides the core aspects of your production or the services that you provide. It's the people behind the scenes. One example could be your accounting staff. Accountants obviously aren't, working the assembly line making products or whatever, but you need to have trained accounting staff to go through and crunch numbers to help people make the best business decisions that they can to figure out what products are profitable and what ones are not, etc. So it is the department that supports production if you think about it in that way. It might not be a product cost because in this case, if we're hardwood cabinets, those accountants aren't producing cabinets, but it's still something behind the scenes that's necessary for the hardwood cabinets to operate. So support services can come in all sorts of different forms. And you, at a big enough company, have a ton of different support services, all the other various things that you have that are needed besides the core part of your business. What we'll go with MBCC. What is the core part of our business? Teaching classes to students. That's how that's how the college operates. We're not really a business, but we're kind of like a business. We need to bring in tuition money to make the things go around. But we can't just have faculty by themselves with all of the students, and that's all we have. We need other things as well. We need an HR department to hire the best possible professors that you can come up with. We need an IT department to make sure all of our technology is working. We need facility maintenance, custodians, if you will, to make sure the buildings look good, etc. So there's a bunch of different support departments that come in. And those costs are necessary costs to run your business. And companies have taken largely, when applicable, to sharing the cost of support services to the main production thing or to the main service that you're providing. And the benefits of that is it allows you to have a bunch more knowledge to figure out what your pricing points are going to be, where you need additional people, where your profitability is coming from, etc. So who bears the cost of these support services? Most companies will find a way to spread them out, but some just treat them all as product costs unless they're directly associated with manufacturing. They'll expense them at the time. And even if they're not, they'll find some simple way to get manufacturing indirect labor into the overhead pool. But for the most part, and for better information, it is better to figure out some logical way to share the cost of your support services with the primary operations of your business. The easiest way by far is to have some kind of single support department. Like you have one element of your business, and that is your only support department. It's not feasible, but if you're a small enough company, you might only have one single department. And for the purpose of this class, it's going to be a good way to introduce you to the concept. So if we have one singular department in there, we need just to figure out how to spread the cost of that department out to the various components of our business. Most companies will do this for a couple of different reasons. When they're valuing products and eventually recording their cost of goods sold, GAAP says you have to have the full cost of those products in there. And if this department that we have counts as indirect manufacturing labor, we have to put the cost in there. So we get a more accurate description of what our true cost of goods sold is by putting the cost into those goods, the various goods that we make as we're producing them. I think this works better as a example problem. So let's do one here for Stokes Marketing Agency, and they're only going to have a single support department. They have two services they provide to customers. They do market research and they do public relations. Well, we got to figure out how to get that cost of their singular support department into those two main services that they provide. And we have an HR department that provides services to market research and public relations. They're going to be our only support department that we're going to assign costs for. So the HR department over here has fixed cost of 120,000. They have variable costs that go into providing their service, and it is based upon how many hours their workers spend, supporting each of these two different departments. So they've decided that they incur about $40 per labor hour in variable costs, and they are Assuming in this case, budgeting for 1,500 total hours, that means the total variable costs are going to be $60,000. So all in all, the total cost of running this department is 180 grand. We got all the information down here about how much time HR thinks is going to spend supporting our two main services. This was the budgeted amount. They thought 900 hours for market research and 600 hours for public relations, but actually they spent 1,000 hours on market research and 500 on public relations. Well, if they have a single rate method, it's as simple as it gets. They put all of those assumed costs into a pool. So they budgeted for a total of $120,000 fixed costs and $60,000 of variable costs. That's $180,000 of expected cost that the HR department's going to incur during the period. And they need to find some kind of allocation base to make a predetermined rate of how they're going to allocate this out. And they've decided in this case that they're going to go on the amount of labor hours they have. So again, up here, they budgeted for a total of 1,500 labor hours of support to these two different departments. Well, if they're expecting $180,000 worth of costs to have 1,500 hours worth of labor, that mats out to $120 per hour. So for every hour the HR department supports one of these two service departments that we have, it's $120 of cost that is being incurred. Well, we can go through now and figure out how much we should actually be assigning at that predetermined allocation rate. And that is based upon the actual amount of hours that you had. So we actually had 1,000 hours for market research and 500 hours for public relations. We're going to take the actual amount of the driver, in this case, the labor hours that went into those two different departments, and we're going to multiply it by our predetermined allocation rate. And if we've got 1,000 hours that was actually used for one department at a rate of 120 per hour, that's 120,000. If we got 500 hours was used by the other department at a rate of 120 per hour, that's 60,000. So how would this company spread out its $180,000 worth of costs by allocating? Well, there we have it right there. We are going to send $120,000 of HR's costs to market research, and we're going to send $60,000 of HR's costs to public relations. And if we're trying to figure out what is the profitability of each of these different functions, well, we need HR to hire marketers and to hire public PR experts, if you will. So that cost is part of the process. Now we've got the full cost of running that service into the service. So single rate, one pool, one driver spreads it out. For a dual rate, it's the same exact concept, but now we're not going to put them all together. We're going to have separate pools for our fixed costs and our variable costs. So going over here, our variable cost rate is going to be $40 per hour. And going back through, I'll back up a second here to get to the numbers again. We are expecting $60,000 of variable costs. We're expecting 1,500 hours to be used by the HR department. That's how much they're going to work. And 60,000 divided by 1,500 is how we're going to arrive at that 40. For our fixed costs over here, we have $120,000 worth of fixed costs we have to spread out. Going back to the slide we were on. If we divide that by the 1,500 budgeted hours, we come up with a rate of $80 per hour. So now we've got two pools, one for variable costs, one for fixed costs. But we're going to spread them out the same way. For every hour that's consumed by HR to support one of these departments, we're going to take $40 of variable cost spread at that department. For every hour, we're going to take $80 of fixed costs and spread at that department. And in this case, variable costs should vary based upon how much time things go in, but fixed costs are not based upon actual usage because fixed costs shouldn't change the more hours HR has to work. They're allocated based on budgeted usage. So scrolling over here, what do we have? The actual amount of hours that HR spent supporting market research was 1,000, and the predetermined rate there was 40. So if you multiply those two together, that's $40,000 worth of cost that's going to market research. For fixed costs, we estimated based upon how many hours we thought we were going to spend here, that it would be $80 an hour allocated. And we only budgeted for 900 hours going to market research. So $80 an hour times 900 is 72,000. You add those two together, that is $112,000 worth of cost that would be assigned to our market research department. Down here for public relations, we'll do the same thing. For variable, We take our predetermined rate, which was $40 an hour, and we multiply by how many hours HR actually spent working with people in public relations, and that was 500. So those two together would give us $20,000 that needs to be spread out of variable costs to public relations. But the fixed component comes out not based on our actual hours, but our budgeted hours. And we expected in this case at a rate of $80 per hour and 600 budgeted hours, that would be $48,000 worth of fixed cost that should be assigned to public relations, and $48,000 in fixed cost and $20,000 in variable cost gives us the $68,000. So the dual rate method spread it out differently, going back for comparison here, than this one did. More costs went into public relations, some more refined methodology, and conceptually it makes some sense. Doesn't matter how much time HR has to spend doing their job function to support either one of these departments. And when it comes to fixed costs, because it shouldn't matter, the amount of time that goes into uh, production doesn't change how much the fixed costs are going to be. So here we've got a more refined estimate of how much HR spent supporting our two separate services. And you have the option of doing both of these. Both of them are a perfectly reasonable way to do it. You would use the single rate method for a one thing because it's simpler. You can get those numbers done faster. Dual rate method is theoretically the better way to go because it takes more points into consideration. It definitely distinguishes between the nature of how fixed costs are incurred and how variable costs are incurred, but it does require more time and complexity to calculate. And with time and complexity comes cost because you're going to have data scientists or accountants, or maybe you have a person that is the function of both. Well, you've got to pay them to crunch all of these numbers. It's not going to change our bottom line. Like it was $180,000 worth of cost being spread out in total. So is the added cost worth the benefit of having better information to work with? You can go crazy with this kind of stuff, trying to come up with the most refined methodology, but is there a point in spending $1.5 million every month to have people come through with the most refined methodologies when it doesn't actually change your revenues or expenses for that period? And the answer to that is all depends on how much gain you think you're going to get from it. If you think that the increase in revenues, increase in profitability that you're going to get from using the more refined method is going to outweigh the additional costs, you would obviously want to go with a more refined method like the dual rate method. If you don't think it's going to matter much in terms of your profitability, your customers are who you are, your business is what it is, probably want to go with the simpler method.